For many years, TROW Price was a great dividend growth stock that was unmatched in the market. However, recent years showed us that the company is struggling. And year to date, the stock is sitting at a minus 3%, massively underperforming the overall market that is sitting at nearly 17%. And if we take a look at the total returns including dividends, we see that TRO is still underperforming the S&P 500 big time. So the question is, why do people like me still like TRO stock? Well, even with a low return, TRO is capable of being a great cash flow machine in my portfolio. They currently pay a juicy 4.75% dividend yield, and also got some pretty impressive growth numbers. However, the last earnings didn't look too good, where they missed on both the EPS and revenue. So let's dive into these earnings. In these earnings highlights, we see that assets under management was reported at 1.57 trillion, up both year over year and quarter over quarter. And this is one of the most important numbers for companies like TRO. And it has to be said that this number was decreasing for a while, but most recently it started to increase again, and they are able to sustain that growth. Net revenue is up year over year, but down quarter over quarter. This is something to keep your eye on. It's not a red flag to me, but you don't want the revenue to slip here too much. Operating expenses increases a little bit, leading to a lower EPS quarter over quarter, but a pretty steady increase year over year, so that's the good part here. Dividends were declared at $1.24, and we see that these are easily covered by the earnings. Diving into the assets under management a little deeper, we see that equity makes up for the vast majority in terms of asset class. And looking at the client type, we see a pretty decent diversification, with institutional being the biggest here. And the US market makes up almost for all the assets under management. Looking at the operating income and the net income, we see that both numbers are coming down quarter over quarter. But year over year, it is still looking pretty good. But let's keep an eye on this number, because as mentioned before, you don't want this number to decrease even further. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. TRO is a 23.5 billion market cap company. PE ratio is at 12, which could indicate that they are undervalued, but they have been trading under the 20 mark for a really long time. Later in this video, I will show you my 3 price targets for TRO, so make sure to watch until the end. Revenue is at 6.8 billion, and in this graph we see that revenue went up in the long run. And again, we see that in 2022 they had a big impact on the company. But most recently they are recovering again, so this looks good to me. And it's the same story with the margins. It went up steady and consistent up until 2022. From there it jumped off a cliff, and most recently we see that margins are recovering again. But keep an eye on the recent numbers, since they were actually decreasing again. For the EPS it is pretty much the same story, nothing really special to add here. Analysis expect that in 2024 the EPS will increase at 20%, which is a high number. From there they have mixed feelings, with almost no growth up until 5% growth. Down the line, it is expected that EPS will increase a little bit between 2024 and 2028. For the revenue growth, it is pretty much the same pattern. However, the bottom line shows us that they expect revenue to decrease. Return on assets is reported at 15.3%, which is a great number. The return on equity also looks really good at almost 20%. But the most important number here, return on invested capital, is reported at 10%, which is a great number in general. But it is much lower versus the 5-year average, so that's something to keep your eye on. Current ratio is at 1.9, which is a decent number. But here comes the great part. Right now, TRO has 380 million in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. TRO has 2.7 billion in total cash, so they can pay down all of their debt without any problems. This is really impressive and comforts me a lot. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, but it is not really steady and consistent lately. It is decreasing for 2 years in a row now, so this is also something to keep your eye on. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 4.75%, which is a great number. Annual payout is at $4.96 and payout ratio is at 58%. I prefer 50% or lower. So right now they have 42% left in cash to pay down debt, do acquisitions, buy back shares, and all other things. The 5-year growth rate is looking really good at 11%, and they have increased the dividends for 37 years in a row, which is also really impressive. And if you take a look at these numbers, the dividends paid since 2014, we see that TRO always increased the dividends at a decent pace. And on top of that, in 2015 and 2021, they paid a supplemental dividend. And to me, this looks really good. I expect the growth to return as the company recovers. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And in here we see that payout ratio increased quite a lot ever since 2022. But from there, it is coming down again as the company recovers. I expect that in the coming year it will go down under the 50% again. And in this graph we see the expected dividends in 2024, 2025 and 2026. Of course this estimation can be highly impacted by results, but it gives you a rough indication. It is expected to increase at a decent pace from here. Overall these dividends look really good to me, but how about the historical returns? I decided to compare TROW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that TRO massively underperformed the S&P 500. In total, TRO returned 15%. And keep in mind this is including dividends. The S&P 500 is at 106%. On the 1-year chart it is pretty much the same story, with TRO returning minus 2%, while the S&P 500 is at 25%. A big difference. On the 6-month chart is getting pretty interesting, with TRO having again a negative return. This time it is sitting at minus 8%, while the S&P 500 is sitting at a positive 8% return. On the 1-month chart, it is again the S&P 500 that is winning here. Bottom line, the S&P 500 was by far the better choice in the long run and in the short run. However, that doesn't have to mean anything for what the future holds for us. So, could this be the perfect time to buy TROW stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 27, 29 and 31, as I expect that this will recover in the coming years. For the free cash flow margin, I'm putting in 24, 26 and 28. For the PE ratio and price to free cash flow, I'm putting in 10, 12 and 14. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, TRO stock is around $104. I hit analyzed and we see a lot of green numbers. We have a low price target of $78 to $88. We have a mid price target of $105 to $118, and we have a high price target of $142 to $157. To me, the mid to high price target is the most justified here, meaning the stock is undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on TROW is that they took a heavy hit in 2022. There is no denying that. But what I like the most about TROW is that they are recovering at a pretty and consistent pace. The assets under management is looking really good right now, and margins are increasing again. The fact that they can pay down older debt without any problems comforts me a lot as well. From a dividend point of view, things look really good. Payout ratio is decreasing, the growth in dividends is also really impressive. From a value point of view, things also look pretty good, with a price target range of $142 to $157. For now, I keep buying TROW stock, since I think it is an amazing company, and the stock looks undervalued to me. And what is your take on TROW stock? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.